Hello, and welcome to Markets in Focus. My name is Joe Bell, and today I'm going to be discussing some of the most interesting financial market themes that I'm observing. So, markets have climbed higher, US equities in the second quarter, but the rally is showing weakness under the surface. In fact, we are starting to see historic underperformance by US small cap equities during this year. And finally, Nvidia. Congratulations, couldn't have happened to a better company. They become the largest company in the world. Let's talk about relative to history. Pretty unique moment. Doesn't actually happen as often as you might think. So between the end of the first quarter and June 19th, these are various segments of the market's performance. You can see there second from the left, the S&P 500 is up 4.8%. For a quarter, that's incredible. That's almost more than the average one-year return in one quarter. So great quarter, right? Well, the rest of the market leaves a little to be desired. Russell 1000 growth, right? Large cap growth names, you can see up 9.1%. That's the reason the S&P 500 is being pulled to positive territory. Look at every other aspect of the market. If we take the Russell 1000 value, the value-oriented part of the market, down 2.3%. Let's take the S&P 500 and instead of market cap weighting it, doing that S&P 500 EW, that acronym stands for equal weight. So not market cap. Let's just take those same 500 stocks and equal weight them. All of a sudden, that index is not up 4.8%. That equal weighted S&P 500 index is down 2.4%. And why is that happening? Well, mid cap and small cap companies are not doing well. And pretty much everything outside of large cap growth is not doing well during the second quarter. The S&P mid cap 400 down 3.5% and Russell 2000 down 4.4%. Now let's talk about that small cap underperformance. This is not new this year, but on the chart here, we have the difference between the S&P 600 and the S&P 500 trailing 12 months performance. So when it's in negative territory, that means that the S&P 600 is underperforming S&P 500. That means small cap stocks are underperforming large cap stocks over the last 12 months. A couple of things stand out. Number one, that has been in negative territory. Small caps have been underperforming large caps for more than a year, more than the past couple of years, really. But take a look at how significantly negative that number is. We have only seen this amount of underperformance by small caps during COVID, when small caps were getting hit much harder than large caps when the economy shut down, and all the way back down to the height of the dot-com bubble. It was even larger. If you remember, there was widespread valuations, but anything outside of tech was not participating during that late stage tech bubble. So just something to keep an eye on, the S&P 500 being buoyed by that large cap, small segment of the market. We would like to see that breadth broaden out to help sustain the longevity of this rally. And finally, congratulations, Nvidia. You did it. They've been on a tear, and everybody's been talking about them and the semiconductor chip company for the past few years. They officially became the largest company in not only the S&P 500, but the world. If you look at the S&P 500 on its own, Nvidia becomes just the 12th company to hold the number one spot, right? The number one spot being the largest company in the S&P 500, only the 12th company to take that crown since 1926. So it doesn't change hands as often. It's kind of interesting to look back historically and see the measure of that. But Nvidia, a lot of positive expectations for the growth of that company, which is heavily invested in not only semiconductor chip technology, but artificial intelligence related to that. And finally, we'll finish on a somewhat somber note for the chances of Joey Chestnut continuing his legacy. For those of you that aren't familiar, he's a 16-time hot dog eating champ in the Nathan's famous hot dog eating contest. Happens every July 4th. And for those of you with July 4th hot dog eating contest plans, he is not going to be participating this year. He inked a sponsorship deal with Impossible Foods. If you haven't heard of those, that's basically a vegan, plant-based meat company, a meatless meat company, if you will. And guess what? They make plant-based hot dogs. And Nathan's Famous said, hey, we make beef hot dogs, and we're not going to let our champion sponsor a competitor. So they're saying Joey Chestnut's out. Joey Chestnut's saying, oh man, I wish I could participate. We will see if they can figure out some sort of a deal between now and July 4th. But right now they're putting a line in the sand saying, hey, if you're going to be sponsored by a potential competitor, you're not going to participate in our sponsored hot dog contest. So opens up the field for all you hot dog aficionados to get out there and try to take the crown this year. With that, I want to thank everyone for watching, and I'll see you next time.